What is going on, guys? We are back for another episode of the Sunday Stock Market Scan. Hopefully you guys have all had a fantastic weekend. We are back. This is going to be the Sunday Scan for May 14th, guys. Like I said, I hope you guys all enjoyed a really nice weekend, enjoyed some time away from the screens. A really, really important, guys, in this market to make sure that you are detoxing on those weekends, guys. It's a lot of screen time in a range-bound market. Really just absolutely need to capitalize on those weekends. So hopefully you guys enjoyed. Quickly, I do want to kind of just first off welcome everybody that is joining us for the first time, guys. If this is your first time watching the Sunday Scan, I want to welcome you. This is going to be the time of the week where every single week on Sunday, guys, I'm going to send out this video, usually between 3 and 4 p.m. on Sunday. This is going to be a complete look inside my game plan for the week ahead. So basically what we're going to focus on in this scan, if you're joining us for the first time, I really do want to first off welcome you. But really, guys, this point of this scan is to give you guys an outline as to what I am personally thinking and looking at into the week ahead, right? I've talked about it so many times over, but the preparation that you do on Sunday is usually reflected in your P&L on the following Friday. So that's really saying that the weekend work you put in is really some of the most important hours you're going to spend at the desk all week long. I personally think that this scan is probably one of the more valuable parts of this service, guys, alongside all of the live streams. This is really where I think so much value can be brought out of. So I really hope you guys enjoy these scans. Don't forget that if you're joining us for the first time, all you have to do is just leave a comment on each one of the Sunday scans. Let me know what helped. Let me know what you'd like to see more of. Let me know what I could have explained better or any questions you have. First off, I'll do my best to answer those comments. And then second off, we do a book giveaway every single month. So if you just leave a comment on any of the Sunday scans, you'll be entered to win the book giveaway at the end of that following month. So again, welcome. Hopefully you guys really enjoy your time inside the room. There's a lot of talented traders and resources within, and I really hope you guys enjoy your time. So first off, just wanted to kind of extend that welcome, give you guys a brief overview of the scan. As far as this week goes, obviously, guys, pretty insane start to last week. Some really big fireworks in a lot of the growth names. And then towards the end of the week, guys, a lot more choppy, definitely a change in the tape on Thursday into Friday. We had a very low volume day on Thursday. Friday, right, we kind of had that really big hourly kind of move to the downside off of the open. The Tesla, obviously trade that occurred on Friday for many was a big reason why I think we saw a lot of downside momentum off of that failed breakout for Tesla. The market kind of follow alongside after that UMISH data came out. So definitely, in my opinion, guys, we've got a pretty big week coming up, right? The two big things that I am going to be focusing on outside of the technicals this week is obviously we've kind of got renewed debt ceiling worries, right? I know there's some conversation about the debt ceiling this weekend. Obviously, guys, there's going to be some noise on that throughout this week. And then second, guys, is I do want to point out we do have some seasonal weakness that we just should kind of note. Historically, right, in terms of seasonality, this is the S&P 500's one of its worst performing weeks of the year, right? So on a seasonal basis, year over year, statistically, this ends up being one of the more shaky time periods. I think the average return this week, going all the way back, was I think just under 0.5% to the downside. So we definitely, and to give you some context, that's a big, almost sneezed there. If you guys missed my sneezing attack on the live stream on Friday morning, you missed a great one. But yeah, so like I said, this is definitely a seasonally weak, time period, right, on a very short-term scale. So I do always like to keep that in the back of my mind, guys. History doesn't repeat, but it often rhymes. So just to keep that in the back of the mind, I always think that seasonality, while not a major confirmation point for me, especially from a day trading perspective, just an important thing to kind of keep in mind, especially the move that we saw on Friday. I talked about it, right, pretty extensively, but obviously you guys know I took a trade on Shopify on Friday. I want to point this out before we kind of get into the meat of the watch list, but this is the daily setup on Shopify, guys. This had been really an A+ setup, right? We kind of had that sweep of liquidity to the downside. We held that prior daily low right at that 62.50 area. And then coming into the day, guys, this has been a setup. If you exclude that Friday daily candle, right, the reason that it was my top watch is we've seen NVIDIA, Microsoft, right, print a lot of these very similar setups. And on Fridays especially, we've seen these setups really moving to the upside, especially on a name like Shopify, which has had some really good fundamental news, right? They laid off 25% of their workforce, really improved margins this past quarter. This thing has been trading like an absolute beast. The volume profile looked fantastic on it, right? We had some really, really nice, confirmation points going into the open on Friday, and this just absolutely failed, right? Which is probably not a fantastic sign for the overall market, right? When you see setups like that, that's a classic kind of bull market type of setup, right? And the fact that that one failed is just kind of, again, it's one of those notes that's in the back of my mind going into a new week like this is that, okay, some of these really strong upside setups that have been working stopped working, right, on Friday. A lot of those setups like Tesla, Shop, ARKK was another one, right? And so I do want to kind of mention that, guys. It's always important to take note of what occurs on Friday. A lot of the time that can kind of give us a little bit of an inkling into what next week is going to look like. And in a tough market like this, you need all of those important confirmation points. It's like a puzzle, right? Like, guys, we talk about that all the time. But noticing these small things like this is definitely an area of importance. So like I said, just a couple things to keep in mind as we go into the week. We've got a lot of those earnings out of the way. We've gotten a lot of those bigger kind of, fundamental macro catalysts out of the way. So the debt ceiling is going to kind of be number one. But really, like I said, guys, this market has shrugged off a lot so far. But like I said, from a seasonality perspective, definitely something to keep in mind. If we look at the broader timeframes, guys, and I just want to kind of give you guys an inkling here, right? This is the current market that we have on our hands, right? S&P 500, we're going on 29 days in this range, really. This is just a level of consolidation that really, is a first for even me, right? To this scale, right? Realistically, the market has not seen a move, I believe, over 1%, over 1.3% for a week, right? Since the end of March and going into April, right? So really since the first week of April, guys, we have just been pinned right inside this base, right? And I think last week, again, was just under 1/3 of 1% in terms of range for the week. The past 5 weekly closes have been right at that 412, 413 area on the S&P. And so it's been really kind of interesting to note just how tight this range has really become. We're really seeing some compression, and therefore you have to be more selective about opportunities, right? We saw a lot of good opportunities set up in growth outside of the indices, which was kind of a first early last week. And then going into this week, guys, I really want to kind of just start with the hourly chart on the S&P, right? I'll put my levels back up here, but this is really what we're looking at, right? One thing I do want to point out, guys, is on Friday, right, alongside that Shopify trade, one thing that I just didn't put enough weight into, right, is we were really towards the top of this range, right, which has just been ever stiffening even on those smaller time frames. So if we look at the hourly chart here, guys, on the S&P 500, you can see that we have just had giga resistance, right, at this 414.29 area, right? And you can see that every time we have touched 419, right, we have really sold off into the bottom of this range, which has been that 409 level on the S&P 500, right? We've seen a lot of support kind of come in at that 409.90 area, 410, but really that 409 has been a big area of support. As you guys can see, we kind of bottomed there on the 10th after a pretty nice downside trade. And then, like I said, guys, we've got a really just kind of solidified range, right, on the hourly, which is, not a horrible thing. But really, when I see range tightening to this extent on the S&P, really what I'm going to do here going into this week is really relegate, my opportunities to only at, the bottom of the range and at the top of it, right? So I really want to be very selective about taking trades anywhere in between this 411 up to 413.3, 414, that zone. I'm going to be really just ultra selective because this has just been a nasty liquidity zone, right, where we just have seen a lot of chop occur, right? Really the only true like tradable moves on those larger time frames, right, like even like the 15 and 30 minute have kind of come either at 409, 410, or on the downside at this 413.8, 414 area. So really going to try to be very selective, guys. This is a, short resistance, buy at support type of market. Not a lot of continuation moves, especially inside the indices. So I just want to kind of preface with that. So really what I'm going to be looking at as we get into Monday, guys, obviously we did close back over that 409.90, 410 area of support. I think that was a very important close for the market. So what I'm going to be watching for as we go into our Monday, guys, and again, the Sunday scan is really a Monday, Tuesday kind of trade plan, is my main focus is really going to be on that 409.96, 410 zone, right? We've seen a lot of support there this past week. And I would like to see us retest that area before really making any moves as we get into Monday, right? I want to see that confirmation point retested on the S&P. If we slip below, I do think we could test the very bottom of that range at that 409 spot, right? So again, that's going to be my primary focus, guys. If we continue to hold into this 409.90, 409 area, I am going to be looking at upside calls on Monday if we hold that zone. However, I do want to mention, right, when we do have that in the back of our mind that we are seeing some, major seasonal weakness as far as this week goes, to the downside, right, I do want to mention the potential, right, of a break downside here under that 408.87 zone, right, which is our low from this past week. I do think we could pretty quickly revisit down into that 404 zone, right? So I don't want to discount that. There's a really nice trade opportunity, sub 408.80 down to 407, and then really probably down towards that 405 area, which we have seen just act as a major, major area of support on the S&P 500, right? So if we look at that kind of broader range, right, it's really into that 405 area, which has acted as that major, major area of support over the past couple weeks, right? Even back into late April, this 405.60 down to 405 has just been a major area, right? So that's going to definitely be a trade focus for me, is if we do get a range break on the hourly under 408.87, which is last week's low. I do like the 407 puts probably for Wednesday or Thursday, again, for a downside trade on the S&P. While, again, if we do break to the upside, right, I personally like calls if we start to form some hourly support at this 409.90 area. So those are really the key pivots that I'm going to be watching, guys. I have literally zero bias on the overall market going into this week. I do want to mention, like I said, we did see some of those kind of bullish setups like Meta, Shopify, Tesla fail on Friday, which we should take note of, right? Some of those tech names did start to unwind. That's a little bit of a character change there within the overall market. So again, I want to mention that and obviously kind of give you guys a little bit of insight into what I'm thinking on the S&P. My trade idea, obviously, if we do break range to the downside, would be those 407 puts for Friday for a test to 405. But even that, guys, overall, this is really just a range-bound market. And so it's, a scalper's paradise to an extent at those range breaks, or at those, bottom and top of the range. Otherwise, right, intraday, like I said, the kind of avoidance area for me is this, right? And I want to avoid the chop zone, right? Which is really, in all reality, this 411, right, into 412.30, 412.40. This has just been a miserable area to be initiating new positions, right? We've just seen a lot of chop in that range. So this is really, I haven't had a true avoidance zone on the S&P for a while, but this 410.84 into 412.43 is just, this is a do not initiate new position type of area for me, guys, really. Even on shorter time frames, right? Even on the 15-minute, even on the 5, right? This has just kind of been a area that I'd more like to avoid, right? I'd really like to be focused on opportunities at the bottom of this range on the hourly and at the top of it, right? So that's going to be my primary focus going into this week on the S&P, right? Pretty standard and straightforward. We've been talking about utilizing the hourly range to really set those key pivots up for the coming week. And this is what I do every Sunday right now, right? Okay, so number one watch for me is going to be on Tesla. This was a nasty, nasty move. I don't think anybody saw that coming, and that's why we saw it unwind so well. I mentioned on my primary Twitter on Friday, I really came into Friday with a little bit of a bias. I just told myself I wasn't going to touch Tesla, but I promised myself I wasn't going to try to fade that gap up because of, how strong I really felt the news was and the tape that we had seen, and especially the way that we had seen names acting off of news, right? Like AMD, Google, right? Those have been names that saw a continuation, right? So I was really only looking at ARK long off of Tesla on that breakout, and we just saw Tesla get absolutely stuffed, right? So I have no problem admitting that, guys. Tesla was a do not touch for me. Ended up being an incredible trade opportunity. Those 170 puts I mentioned on my primary Twitter went from $5 per contract to over $100 per contract. So a 2,000% return in the first 90 minutes. They ended up going deep in the money. Pretty insane trade, right? That being said, Tesla has been a name that I have primarily been focused on to the short side really since their earnings report, right? Had a big miss on free cash flow estimates. The stock has just not traded that well, right? It's been a heavy trader, kind of been a laggard, really outside of the last week and a half. And I think that really the reason why we saw it trade with some strength on the daily chart up into that news, right? You can see right here, right? We really did start to kind of have some consolidation and strength. Was because that news was coming, and then that news got sold on high selling volume on the daily. That's a nasty engulfing candle on the daily, guys. Engulfed the prior 3 daily candles and really all prior 4 daily candles, right? So now we're at a bit more of an interesting spot, right? So really the key for me on Tesla, what I would love, right? The A+ setup for me going into this week is going to be a retest of the top of this kind of range, right? We've kind of almost got this like bear flaggy look. If we do not hold this 167 area, right, down into 166.80, that's where that bigger downside trade takes place, right, under 166.5, 167, right, low of the day from Friday. However, what I would love to see would actually be a retest of 169, right? 169.90 was that big key level on the daily, guys. If we clear all the levels here, right? Really that major key level on the daily was that 169.9 up to 169.63, right? So in that zone, that's been a very, very key level. And what I would personally like to see would actually be a retest of that spot on the hourly on Monday. If we can retest up in here into 169, 169.6, this is going to be an A+ risk reward short zone for me with invalidation above 170, right? When we see a move trade like this with how heavy it's been trading, really that's going to be kind of the A+ spot for me. A reason I'm a little bit more hesitant to be shorting down here, right, and why I want to see a retest of 170 first is because of the fact that we just have had such strong support at 166.50, right? Either way, this is set up for an A+ opportunity. Once again, I'm really not going to be looking to long Tesla, especially after that tape on Friday. There was a rumor that Elon was going to be leaving Tesla. I think that's just honestly a hot air rumor. But the news of him replacing the CEO at Twitter, that news got sold regardless, right? It was just clearly a catalyst that had kind of been baked in, and once it came, it was a sell the news type of event instead of what we had been seeing, which is, Google had news, right, on their Bard ChatGPT rival, and that news actually got bought and continued, right? Same thing for AMD, and really a lot of these names that have seen positive news catalysts. The difference here on Tesla is clearly the public or whoever, right, was waiting to sell that news because it had kind of been priced in to an extent. That's clearly what Friday's price action showed me. You can clearly see that in the selling volume that we saw on the 12th. We rejected that gap fill to the upside, or filled that gap to the upside technically, and then rejected at the prior support at 180. So really, Tesla's going to be a short rips type of name for me now. Again, the A+ setup for me, guys, would be hourly test at 169.63, rejection at that spot, and then target of 166, 167 below. I would love for a breakdown under 167, right? If we get that breakdown sub 166.60, guys, I think we see 160 fast, right? So personally, I think that's hot air below. But again, range-bound market, trade it for what it is. As of right now, that 166.6 area is support on Tesla. Personally, like I said, I'm going to be looking to short rips here into 170. If we get a breakdown under 166, I'd be waiting for an hourly close below and then looking to target that move down to 163 and then that 161 zone. So again, that's the A+ setup for me on Tesla. On a retest of 169.63, personally, I would be looking at the 165 puts for this upcoming week. I would like a bounce also for premiums to kind of reset because after that was basically while we ended the day down really just only 2.5%. that was really about a 6% move or 7% move almost from its high to its low for the day. So after that kind of move, I would like to at least see a retest of 170 before taking the short side, just because those premiums on the downside, those put premiums are pretty gassed right now and pretty juiced. So I'd like to see a retest of 169.63 and some consolidation within that zone. But again, that's going to be the focus levels for me, guys. Like I said, retest 169 on Tesla. Going to be looking to take that to the short side on the 15-minute, right? So that's the focus for me, guys. As far as the breakdown goes, like again, I said, if we close an hourly candle sub 166.6, that's where I would see some larger potential downside and where I'd probably look at like the 160 puts, honestly. So those are the downside focus setups for me on Tesla going into the week ahead, right? Okay. Another downside setup that is going to interest me, and one that's given me a little bit of trouble over the past week, honestly, has been Meta, right? This name, obviously, guys, is seeing a lot of buyers come in at that 230 zone. We saw it at 231 again on Friday, right? Personally, I'm going to look at for a retest of 235 here on Meta. I am mentioning this setup less for a day trade on Monday and more for a broader spectrum setup that I want to look at going into this week, okay? Really what I want to see on Meta, this was a pretty clear break to the upside, rejection. There's this massive gap below. If we're going to have a heavy week throughout the market, I would personally start to get really interested in that potential gap fill sub 230, obviously. But really, like I said, guys, I'm kind of just mentioning this because I think this is going to be a fantastic trade when it does take place. Just going to have to be patient, and that's going to really be the theme going into this week. But I want to put this on your radar. I did have some puts on Friday afternoon. Took like an 11% loss on some puts for this week. Personally, just was not interested in holding over the weekend. When I take full-size positions like that, guys, I tend to keep a hard stop in that 15 to 20% range at max. I really try to keep it more towards 15 to 10% in this market. It's just not worth letting full-size positions come against that 15% stop loss. That's been the magic number for me because, like I said, it's a base hit market. So in a base hit market, it's crucial to keep those full-size positions to a really manageable loss and really making sure that obviously locking gains in correctly on the ones that work in favor, right? So that's definitely a focus for me this week, guys, is paying attention. Obviously, we've got that gap to fill. There's been a lot of consolidation here now on Meta, right? We're talking about 9+ days. So like I said, definitely an interesting stock, an interesting setup for me going into this week. For that gap fill, what I'm really going to pay attention to, like I said, personally, I'd like to see that 235 area get retested and fail. Like I said, guys, I'm just more comfortable taking full-size positions on the downside at areas of resistance and taking full-size long positions at areas of support. So, like I said, that's just kind of what's been working for me as of late. But like I said, that's going to be the primary focus for me going into this week. Another big one I want to pay attention to, guys, Carvana. This is my favorite long setup as we get into this week, right? Absolutely killer earnings report from these guys a couple weeks ago or a week ago. Obviously, right, we saw gap up, consolidate. I mean, this was an absolute huge winner last week, guys. Took this, I think, for 3 or 4 different trades. I think all of them printed like over 100%. Just a huge, huge winner last week, guys. And it's really set up kind of nicely now going into this week, right? We talk about this all the time, but that kind of volume distribution, right? Obviously, we saw this major buying volume come in over that 3-day period, and then we get really low selling volume that brings us all the way back down to where? That key retest point, right? We are retesting that $10 level. It's not only a key psychological level, guys, but it's a really, really key breakout retest, right? We rejected the weekly breakout, right? However, because that kind of would have sent us, really, there wasn't a ton of resistance left for a move up to 16 plus. However, it looked like we got a little bit tired. The liquidity was not there to support it. And what really that means is there's just not enough volume, right? And that's something that we're seeing in this market, guys. It's just not as liquid of a market as it was in 2020 and 2021, especially in 2022, even like early parts. This is this resembles when you have a more range-bound market, right? There's not as much money in any of these names, right? So it's going to be really interesting to see. Personally, From an hourly and daily perspective, right, which we've used the hourly just nonstop on Carvana. It's my favorite time frame to use. If we look here, right? Okay, clearly we kind of had that staircase pattern on Carvana all of last week, right? We consolidate, we break to the upside, right? We make new highs, we reconsolidate at that old high, make new highs, come down, sideways, consolidate, gap up, new high, right? Consolidate, and that's where it failed, right? When we failed to make a new high on the hourly, that would have been a really nice clean short trade on Carvana on Thursday, right? And then we failed. Now we're going sideways, right? Down again. The key here is going to be on this hourly chart, right? So what has the pattern break that we've seen, right? Sideways consolidation, and then we make a decision, right? On Carvana into this week, if that decision can be to the upside, right, because we did hold that key support at that 1040 zone, I do think there's a really nice trade back up towards that 1170 key level, which we talked about so much last week, right? 1165, 1170. It's just going to be a very, very, very important to pay attention to which direction we choose, because that's what I'm going to be looking to play, right? We've trapped on that initial hourly candle on Friday, and then we started to form this base. So what I am going to be looking for would be Friday's low to hold, right? I want to see us build some consolidation. It might take a few more hours, right, in terms of hourly consolidation goes to pick a direction here. But if we continue to see them trap at this $10 level, this moves up to a very much an A+ setup for me. I love trading stocks to the upside intraday and during the week after they report solid earnings reports, which is something that, you'll hear a lot of traders talk about, but it's just much easier, right, to trade with the trend if with that fundamental trend, if it's strong, right? Like with Tesla, the free cash flow estimates were just not where they needed to be, right? So big money is going to, not be, as inclined to be long on a stock like that. Whereas a name like Carvana, who vastly improved fundamentals this past quarter and is really on track to kind of rebuilding their business, right? From fears of bankruptcy to now, possibly turning a profit, if not this next quarter, the one after. This is where it becomes important to pay attention to fundamentals to at least some extent, right? And I am by no means a fundamental expert. I will never tell you that I am, but I know how to interpret the fundamentals to the point where it's going to help me guide through my trades, right? This was a massive winner early last week, and it's going to be at the very top of my watch list once again this week. If we do not hold this 1022 area or lows from Friday, if we kind of break that larger support, that would be where I would kind of look towards, okay, maybe we're actually going to come all the way back towards this 870 area, which is just a much broader time frame key level on the weekly, daily, right? Much larger time frame key level. Personally, I think this is a logical place for us to now see a bounce back towards 1170. So this is going to be at the very, very, very top of my watch list as we get into Monday morning, guys. Probably, honestly, my top watch off this 1040 level, and especially if we start to trap and hold low of the day at 1023. If you did not learn about the personality of this stock last week, you should go back and look at a lot of my notes on it in the Discord. You can just look up CVNA, messages from Mans. When they start to trap on this stock, that's when I start to pay attention. So I'd love to see some type of liquidity trap. The focus for me would be on the $12 calls on Carvana. This is a name that moves very fast and very rapidly. Therefore, I like to get a little bit more exposure out of the money on this one. So again, usually if it's trading around 10 or so, my focus is going to be on the $12 strikes, right? Because this name, it moves 12 to 13% in a day, right? So that's personally where I see the best risk to reward. So that's going to be a main focus for me as we go into this week as well, guys, right? Last thing I do want to kind of mention, obviously, DXY, really kind of stronger chart building here, guys. This daily chart on DXY is really, really, really notable. So really want to keep a close eye on this, guys, as we get into the week. And like I said, just going to be very, very important. So like I said, guys, this is going to be a spot that I want to pay attention to on DXY going into this week, starting to break that trend to the upside. We will see if that holds. Obviously, dollar up, not usually good for the equity market. So this is one of the reasons that even on a setup like Carvana, I'm going to be very patient on, because if the dollar starts to ramp, that's going to really kind of shift my focus towards the short side. That's also why I mentioned that potential breakdown on the S&P 500. If we start to see the dollar really ramp over that 103 level, it's going to really start to become a bit more of a focus for me. So like I said, guys, interesting week ahead. Debt ceiling fears, obviously going to be providing some noise, like I mentioned. Again, I would really pay attention. We obviously have OPEX this week. If you are not familiar, we have monthly options expiration this week. That's a huge catalyst for the overall market, often results in a lot of chop, a lot more sideways action because, you know, market makers don't want to see those out of the money. The options end up in the money. So we tend to see a lot of kind of pinning of names, right? So it's just a base hit type of week, guys. And I really can't emphasize that enough. But it's coming into OPEX. It's very important to be familiar with where you are, you know, in terms of those options that are expiring. So like I said, important to note that always kind of, we mentioned this last week, but that, you know, bank short selling ban is also a catalyst. It's been quiet for a week, but that's where I start to kind of, in the back of my mind, I want to keep a really close tabs on if we get any type of announcement regarding that, because like I said, I think that's, again, a negative catalyst for the overall market. So those are a couple of things I'm going to be watching this week, guys. Like I said, we covered Meta, covered Tesla, covered the S&P 500, covered Carvana on the long side, and we talked about the DXY a bit. So like I said, guys, those are going to be some of the main focuses for me this week. Very excited to take on this week with you guys. If you are new and just joined us for the first time, I really hope you enjoyed your first Sunday scan, and I will see you guys bright and early on the pre-market live stream tomorrow morning at 9:05 Eastern Standard Time. I will see you guys there. See you in the Discord this week. Let's have an awesome one. Peace.